Hello, Maverick. Zimri here, and welcome to today's currency recap. It is Thursday, October 12th. So today we'll be doing a review of our trading day. We're going to be taking a look at any meaningful news from today. We'll be looking at the broader equity markets, some commodity analysis, and then we're going to do some technical analysis on the major indices. We're also going to look at the currency baskets, as well as any major news reports to close out the week. And then finally, we're going to look at some trading setups and opportunities in the currency markets. In this currency recap, we will be using some advanced technical analysis. We believe technical analysis is the fundamental skill for every profitable Forex and crypto trader. Maverick Currencies is currently hiring serious technical traders for a trader position. Traders will trade firm capital and keep 70 to 80% of the profits. If you're a technical trader with a technically based trading system, we want to meet you. Click the application link in the description below this video to learn more. Now let's break down today's market action. Market analysis. Okay, so starting off with some news for the day. Basically, the headlines are stocks are down, yields went up. CPI print continues to show that inflation remains sticky, and the dollar is up on the day as a result. So taking a look at how the major markets that we track today have done other than currencies, fiat currencies that is, the S&P down on the day, same with the total world stock index, crypto and gold as well, oil holding flat. Over on the fiat currency side, the dollar and the yen were the big winners on the day. The European currencies, mainly the euro and the Swissy, kind of held their heads above water a little bit flat. Pound down on the day, the loonie up on the day, benefiting a tiny bit from the dollar's shine, the US dollar that is. And then the Aussie and Kiwi dollars for the day were the biggest losers. Over in cryptocurrency land, ETH was the biggest loser on the day, but Litecoin, Bitcoin Cash, and Bitcoin, the other major cryptos we track, were also down. So the market gets a -2 rating today. We've popped above the 20-period moving average, but the slope is still negative for both moving averages, and we're still below the 50-period moving average. So taking a look at this chart, we're in no man's land. So I think it's getting a little bit tricky right now to call the market. Anytime we're between two moving averages, things get a little bit dicey. So obviously we're going to roll over and break below the 20-period moving average, returning us into firmly bear market territory again. Well, considering the recent rundown we've had anyway from late summer onwards, or we're going to break above the moving averages and look significantly higher. It's tough to call it. It really is. I can see it breaking either way right now from considering the technicals. So my position is to remain neutral for the next couple of trading sessions, see which way we go, and then trade and act with a higher degree of confidence once that actually occurs and we get a break in one direction or the other. As far as news goes, like I said, the CPI print came in hotter than expected, which was the volatility catalyst behind today's action. And then tomorrow, we don't really have too much to close out the week, but we do have consumer sentiment coming out in the US at 10 a.m., so keep an eye on that. Moving on now into currency analysis. So from a velocity perspective, yen and the dollar leading the pack, the Aussie and Kiwi dollars leading the pack on the negative side of the velocity scorecard. So we're definitely going to be taking a look at those currencies and some more right now as we head over into TradingView. So first up is the yen. The pullback in the yen is definitely a lot steeper than I thought it would be. I thought we would stop around the 61.8% mark, but we went down to about an 80% retracement. But it doesn't change the general forecast that I'm calling for, which is for us to now exceed this prior peak in the yen. So I'm bullish on the yen, looking for opportunities to buy the yen and be short the other currencies. The Aussie yen currency pair rolled over in a great manner today. Now, as far as the US dollar goes, I'm now going to have to revise this forecast a little bit, and it's unlikely that wave 4 is over yet, given the extent of today's rally. We might be putting in what in Elliott wave terms is called a triangle. So a triangle has 5 points labeled A, B, C, D, and E, and it would look something like this. So I think that we are in the late stages of finishing wave D. We need a pullback in wave E, and then we can break higher to complete wave 5. So dollar strength might still be in the cards after all. But if this is indeed a triangle, it's a little bit too early to tell. We'll know for sure if we get a clear 3-wave decline to complete wave E of the triangle. But if we do, then we can expect one final push higher to complete wave 5 in the dollar. Okay, Swiss franc now. So I said, let's wait to see what happens once we're in the support zone. Well, clearly we've got a nice rally underway. So far, on a percentage basis, we have retraced just over 50% of that entire decline. Is that enough to cap this rally in the Swiss franc? Too early to tell, but my prediction for the Swissy is ultimately another big bearish move lower. So I'm looking for reasons to short the Swissy as well. The euro here, not really giving us too much of anything, pretty much sideways price action, but I would also expect the euro to break through the support region. The price action we've seen since we did land in support is not very convincing to me in terms of favoring the euro for a larger bullish run. Could be wrong, of course, but I'm just saying visually the price action looks pretty anemic to me, which is indicative of a larger breakdown. The pound, following the script, traded back into that broken support zone, now treating it as resistance, and I'm now looking for the pound to trade sharply lower. Loonie, well, we've gotten the 5-wave decline I've been waiting for, so that tells me the greater trend in the loonie is now down. We've got a nice 3-wave rally, counter trend, expecting a sharp round of decline in the Canadian dollar as well. Okay, Australian dollar. Nothing new here. I've been calling for a breakdown in the Aussie for weeks, and I still expect that breakdown to continue on. And it's a very similar situation in the New Zealand dollar, which I said was less clear than the Aussie. But given the extent of this decline, it now seems likely that the Kiwi dollar has also topped out, and we could be seeing the Kiwi head lower as well. The key level holding the rally together in the Kiwi, however, is this low in the basket coming in at 68.41, which coincides with the low from October 3rd. I don't think I'm going to play the Kiwi until we break below this level, however, just to give me that extra peace of mind. So there you have it, folks. Some currency analysis on our baskets, some possible trade setups. So in conclusion, as always, keep it simple. Play relative strength and weakness, focus on proper position sizing, and always follow your trading plan. All right, that's it for me, Mavericks. I'll talk to you next week. Bye for now.